I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. It's November 13th, 2013. I'm Logan Burgess. To my right here is Cody Bills to help break down the action that we saw in a relatively quiet trade on a Wednesday here in the grain market. Jumping into fire tip, as you can see, corn was down 2.5 cents for December. January beans up just half a penny. Chicago wheat up 1/4 of a penny. Kansas City wheat off 1.25 pennies. Really not a lot of information for traders to chew over today. That was reflected in the price action, certainly. One thing, though, that was getting talked quite a bit about today, kind of more of a long-term story, but certainly very important, was what is the EPA going to do with the upcoming renewable fuel standard? Cody, as of today, where do we stand on that?
Well, right now the Renewable Fuels Act is mandating about 14.4 billion gallons of corn-based ethanol to be blended into gasoline. There's talks that we could actually see that number reduced to 13 billion gallons. The bottom line here is there was a report that was leaked into the market, and that suggested that we could see that revision of about 1.4 billion gallons of ethanol mandated into to be used in gasoline production. But the bottom line is, how seriously should we be taking this? And the answer here really is quite seriously. In the White House, we've seen since October 21st, we've seen about 17 different meetings. We've seen about 84 industry executives from the biofuels industry meeting with the White House staff. I think there's likely going to be a revision here, and I believe the market is suspecting that revision is going to be lowered here. Logan, with that being considered here, where do you think price is going to go? How do you think the market is going to react if we do see a revision lower?
You know, I think if we do see an announcement that the revision is going to be lower, I think we could see a little bit of negative price action, but I don't think it's going to be a major one-day blow to this corn market. The reason why I say that is, you know, based on what you said and based on what we've seen, it certainly seems like right now the bias in the corn market is that the renewable fuels standard is going to be scaled back here for the upcoming year. The big question now is, to what extent are we going to see it scaled back? Certainly, as you said, Cody, the big number right now circulating is that 13 billion gallon requirement. If we did see it scaled back to that extent, that would cut about 500 million bushels of corn usage out of the corn market. That's about 4% of total usage. So certainly an important amount of corn there for traders to consider as it would relate to ending stocks and usage in general. But as I said, I think the bias is in the market that we are going to see renewable fuel standards scaled back. And I think that this is going to kind of be a dark cloud that's going to hang over the corn market until we do get a resolution on it. I certainly think that the action we've seen since the November WASDE report has had this kind of in mind. You know, we saw a fairly good reaction in terms of price for 2 days there, but we sold off the last 2 days, so I think traders are kind of waiting for this EPA issue to be resolved here before moving forward.
You know, one other thing to keep in mind too is that just because you lower the mandate doesn't necessarily mean that you lower the actual corn produced and blended into gasoline. That has more to do with ethanol margins. And of course, if we have decent ethanol margins, we could come out over the mandate as we have in years past. And of course, that it just basically saying that if they lower that mandate, it doesn't necessarily mean we're going to get this market hammered with price action moving lower.
You know, if we look at the margins right now, it seems like the margins are in a place where we could see pretty good ethanol production here and therefore corn consumption for the remainder of the marketing year. Right now we see it sitting about $2.50 per bushel in the state of Iowa. That certainly helped out ethanol production on a weekly basis. Last 2 weeks here we've seen over 900,000 barrels per day on average produced in the U.S. We will be getting EIA ethanol numbers out tomorrow. They were delayed a day due to the Veterans Day holiday, but certainly ethanol so far this year has been very strong compared to what people were expecting. And I think that this EPA issue it kind of helped the USDA not make any revisions to their ethanol usage in the November WASDE report. Still projecting 4.9 billion bushels of corn being used there. I think once this EPA issue is resolved, the USDA is going to feel like they have a little bit more leeway in adjusting that number, or more information to make a more informed number a more informed projection.
That sounds fair enough. Guys, that wraps up today's show. If you have any questions about what we talked about, give us a call at 877-472-4607. Remember, you can go to our website, grainheads.com, take a demo of the Fire Tip Trading platform if you want to see live quotes, be able to execute your own trades. Thanks a lot for tuning in. Remember, you'll see us here tomorrow on GrainTV.